Eric Mwadid, Mwadid.com. Today I want to take a look at negative divergence. We're going to be using an Indian stock, and here we're going to show how on this 2-year weekly chart sometimes using the negative divergence can be misleading. For example, you can see a couple of negative divergence areas. You can see here as the stock was, or the RSI was going down, stock continued making new highs, and on it went on making new highs even after that negative divergence. There was negative divergence here during this period, and again we see the stock went on to make new highs. And then again there was a slight negative divergence here, and we can see that eventually the stock would go on to record higher prices. And we can also see that there was negative divergence recently, which is this period here, and again the stock has gone to record new highs. So even though you are looking for a major correction because of all these different types of negative divergences here, you're still losing money. Currently we see that there's also what looks like the formation of another negative divergence, improving price highs and declining technicals. Even though that might be the case, I'm going to show you why, 2 reasons why the stock continues to make new highs. The first one is pretty obvious. On the weekly chart you can see that every time it comes back to test the 50 RSI level on the weekly, it finds support. So there was support here for this nice re-entry. There was support here just above 50 again for another re-entry during those lows. So one thing that is happening here is that the stock is coming back to test the 50 RSI level and holding, and a good stock will tend to do that, and every time it holds the 50 level it tends to go back to new highs. And the other reason why the stock continues trading higher is because on the monthly we have the RSI trading firmly above 69.1 going all the way back to late 2013. So because the monthly is absolutely powerful, holding above 69.1, that also is another reason why the stock is not going down. Why? Because the monthly chart continues to be very strong. So you have weekly chart giving you support at the 50 level during pullbacks, and you have your monthly RSI continues to stay very strong. This is a sign of strength, and that's why looking for negative divergence as a way to short stocks or as a way to get out of stocks is not the best way to do things. You're better off making sure that the monthly RSI is not trading below 69.1 first, and also make sure that the stock is breaking at the very least below the 50 level on its weekly RSI. Eric Mwadid, Mwadid.com. As always, good luck, peace, and blessings. I am out for now. I shall be back probably tomorrow. Woo!